Good afternoon, everyone. I'd like to welcome you to our 64th annual meeting of the membership. At this time, I would like to introduce Carolyn Welsh, our board chair, to call the meeting to order.
Thank you, Scott. For the 64th annual meeting of the membership, please come to order. Mr. Secretary, please confirm we have a quorum and proceed with the approval of the minutes from last year's annual meeting.
Thank you, Madam Chair. In accordance with the bylaws of the Community First Credit Union, the quorum is present for the 64th annual meeting of the membership. The minutes of last year's meeting were provided electronically to the membership prior to this meeting. Are there any proposed corrections to the minutes as presented? Hearing no proposed corrections, the minutes are approved as previously provided. Thank you, Madam Chair.
Thank you, Mr. Secretary. After a few remarks, I'd like to invite our President and CEO, Scott Johnson, to join me in recapping 2022 and saying a few words for what our members have to look forward to in 2023. So despite a volatile economic environment in 2022, your credit union grew by 8% organically and ended the year with $824 million in assets, which continues to place your credit union in the top 12% of all credit unions in the nation by asset size. Your credit union remains fiscally sound, strong, and well capitalized as we embark upon 2023. Due to the continued loyalty of our members and our strong financial performance, your credit union's regulatory net worth increased to 8.7% from 8.29% at the end of 2021. Our strong financial performance reinforces our commitment to our membership to continue to provide our members with excellent deposit rates, affordable financing, outstanding service, and greater digital conveniences in 2023. I'd like to thank all the employees of the credit union and the volunteers from our board of directors and the supervisory committee for their contributions and commitment in 2022. At this time, I'd like to turn it over to Scott for his comments regarding 2022 and a look forward to 2023.
Thank you, Madam Chair.
Thank you, Scott.
As we began 2022, challenges from the COVID pandemic continue to persist. And while those challenges began to wane in the second quarter, new macroeconomic challenges emerged as the Fed initiated a series of interest rate increases to combat a worsening inflation outlook with a tenacity not experienced in 40 years. The historically tight labor market, coupled with high inflation and supply chains still finding their post-COVID footing, contributed to a very volatile economic environment that demonstrated pricing pressures were anything but transitory. Despite the economic challenges, your credit union continued to focus on its core mission of people helping people. We exist as an institution to serve our members and the communities they call home. Our members rewarded that commitment, and your credit union generated record earnings of $8.6 million while continuing to grow safely and soundly. I would like to take a moment and thank our employees for their dedication in 2022. Without them, none of this is possible. I would also like to thank our board and supervisory committee volunteers for their service and support in serving our members and our local communities. As we look back on 2022, I would like to take a moment and spotlight a few noteworthy accomplishments for your credit union. Our dividend rates on our share deposit products remain consistently higher than the average of our competitors in the communities we serve. At a time when inflation rose more on an annualized basis than it has in 40 years, your hard-earned dollars continue to earn more at Community First. We were the only institution in our local markets to offer an inflation-adjusted certificate to ensure that our members would continue to earn more in a rising rate environment. Our members continue to take advantage of financing terms that are far superior to for-profit banks. Our loan to deposit ratio ended the year at 84.8%, which we are very proud of. Our investment portfolio at the end of 2022 represented 11.4% of total assets, considerably lower than the national average of 20% for all federally insured credit unions. Our focus remains on providing affordable credit for our members. Liquidity, which was ample in 2020 and 2021 due to reduced consumer spending and government stimulus programs in response to the pandemic, became a more pressing concern for all credit unions and banks in 2022. Our primary liquidity position into 2022 at a very healthy 7.6%. Additionally, we more than doubled our access to contingent liquidity sources in 2022. Your credit union's balance sheet also had zero borrowings or leverage at the end of 2022. Carolyn spoke before about our increase in regulatory net worth to 8.7% from 8.29% at the end of 2021. And the other thing I would like to mention for 2022 is our ongoing commitment to serving the local communities in which we call home. Our employees volunteered at an in-service day in 2022 at the Redwood Empire Food Bank. Together, we packed over 18,000 pounds of food, which translated into over 15,000 meals for those in need. Additionally, our employees voted Community First as one of the best places to work in 2022 by the North Bay Business Journal for the second year in a row. As we forge ahead in 2023, we have a number of new initiatives planned to continue to provide enhanced services to our members. At the end of 2022, we made a very sizable investment in new digital banking technology to dramatically improve the digital services we provide to our members. We're excited to launch a more robust, convenient, and intuitive platform for our members in the fourth quarter of this year. We'll be sharing much more about that as we get closer to the implementation date later this year. We've also invested in new technology to roll out a new public website this summer with a more intuitive design and better accessibility to make it easier for our members to find information. We'll be sharing much more about that shortly as well as we get closer to the summer. Accompanying both of these new investments will be the ability for our members to digitally chat with one of our team members for any questions about the credit union or for any service requests associated with their accounts. While our members can still visit one of our many convenient branches or call us at our contact center, we are committed to providing enhanced digital services to all of our members to make your digital experiences easier and more convenient. Another thing I'd like to share with you is that we've been recently approved by Freddie Mac for a new secondary market relationship. This will help us better meet the financing needs of our members who are seeking to purchase or refinance a home. It'll allow us to offer better financing terms in the future and allow your trusted credit union to continue to service your loan after it's been funded. In closing, I'd like to thank all of you for your continued membership at Community First. I know you have many choices when it comes to the choice of a financial partner. By continuing to place your trust in a local, fiscally responsible, not-for-profit financial institution that serves the needs of Main Street and not Wall Street, we couldn't be more excited to serve you. I recently wrote to you about the demise of a few large regional for-profit institutions and how your credit union has a very different operating model and mission. All of our energy continues to remain focused on providing value for our local members, not the equity shareholders of publicly traded companies. Our motto is here for good, and we remain here for you now and in the future for you and the residents of all the local communities that we serve. Thank you.
Thank you, Scott. Our treasurer, Mr. Cochran, is unable to be with us today, so our CEO, Scott, will now present the report of the treasurer on his behalf.
Thank you, Madam Chair. Unfortunately, Mr. Cochran could not be here with us today, so I will be handling the report of the treasurer on his behalf. For the year ending in 2022, the credit union had total assets of $824 million, which represented an 8.2% increase from the end of 2021. Asset growth is primarily driven by share deposit growth, which finished 2022 at $742 million and represented a 7.9% increase from 2021. Certificate funding led the way in 2022, due in large part to depositors capitalizing on the changes in the rising rate environment by moving to non-maturity shares to certificates. Core shares, share drafts, and money markets were relatively flat in 2021, with share drafts experiencing a slight decline, due in large part to negative real wage growth and a highly inflationary cycle. I spoke before about our strong liquidity position at the end of 2022. The credit union also experienced strong loan growth in 2022. Total loans increased by $56 million and ended 2022 at $629 million, which represents a 9.8% increase from 2021. Growth in the loan portfolio was led by new and used auto loans and a slight increase in real estate loans. Unsecured consumer loans also increased by 33%, which was a marked improvement from previous years. The credit union's allowance for loan loss reserves decreased by $623,000 to $2.8 million at the end of 2022 due to the elimination of COVID Q&E factors that we set aside during the pandemic that were no longer necessary. However, the credit union has moved to the current expected credit loss standard for 2023. We spoke before about record earnings in 2022 at $8.6 million, and those record earnings had a very positive impact on our regulatory net worth ratio as it finished the year at 8.7%. Credit unions with a net worth ratio that are 7% or greater are considered well capitalized by the National Credit Union Administration. Your credit union remains strong and well capitalized for the future. Thank you again for your support and membership with Community First.
Thank you, Scott. At this time, I would like to welcome Carrie Shumway, CFCU's Chief Lending Officer, to give the report of the credit manager.
Thank you, Madam Chair. 2022 was a slower year for loan origination volumes. Loan demand was partially diluted in comparison to previous year due to the rapid increase of interest rates attributable to the FOMC's monetary policy decisions to quell inflation. With the rise in financing costs, consumer demand for automobile and residential real estate purchases were not as robust in comparison to the historically low rate environment that we had in 2021. Despite these macroeconomic conditions, the credit union originated $262 million in loans for our members. While total loan funding was generally lower in 2022 than compared to 2021 due to the historically low rate environment, net interest income spreads remained strong at 3.33%. Community First ranked higher in net interest income spread compared to all credit unions nationally and within our peer asset size benchmark. Credit unions in our asset size averaged 2.92% in net interest spread in 2022. Auto lending channels witnessed consistent funding levels with $28.5 million in direct loans and $178 million in indirect loans to members, which represented an increase of $1.7 million in auto loan production as compared to 2021. Origination of the First Trust deeds, our mortgages, slowed to $27.7 million for 2022, which is a decrease of $80.3 million, primarily driven by the current mortgage rate environment and historically low inventories of homes for sale. Unsecured consumer lending originations increased by $4.5 million in 2022 as compared to 2021, and that's an increase of 86.7%. That increase is related to the alignment of pricing, processes, and decisioning aligned with modern market standards. Unsecured consumer lending will continue to be a focus for Community First as a point of emphasis in 2023 and beyond, as we continue to serve the financial services of all of the Community First members. Reportable delinquencies were slightly under forecast for 2022. Continued inflationary pressures continue to persist, causing tighter member budgets and negative real wage growth. The COVID-related stimulus, loan extension, and loan deferral requests have returned to normal pre-COVID levels, and hardship programs for members experiencing a temporary hardship can continue to request assistance from us. The credit union's reportable delinquency as a percentage of total assets finished the year at 0.91%, which represented a 0.39% increase compared to the same time period in 2021. Net charge-offs were $1.6 million for 2022, as compared to $942,000 in 2021. The increase in net charge-offs is directly attributable to the changes in the macroeconomic environment. On behalf of the Community First leadership team, I'd like to sincerely thank all of our members for continuing to place their trust in Community First in 2022. Our motto is here for good, and we remain here for you now and in the future. And we're here to provide all of our members with excellent rates, superior service for all of their financing needs. Madam Chair.
Thank you, Carrie. At this time, I'd like to welcome John Curry, our Supervisory Committee Chair, to give the report of the Supervisory Committee. John?
Thank you, Madam Chair. the Supervisory Committee of Community First Credit Union works in conjunction with the Board of Directors to monitor and review the credit union's accounting procedures and practices. The Supervisory Committee endeavors to ensure that all fiscal operations are performed accurately and in compliance with the applicable regulations and generally accepted accounting principles, GAAP. To assist the Supervisory Committee in monitoring the credit union's fiscal activities, we retain the services of an independent public accounting firm to perform an audit of the financial statements and records of Community First Credit Union as of December 31st, 2022. Turner, Warren, Wang, and Conrad AC performed the annual financial statement audit. It is the Supervisory Committee opinion that the financial statements for Community First Credit Union as of December 31st, 2022 provide a fair and accurate representation of the physical condition of the credit union. We would like to extend our gratitude to the volunteers and staff for their ongoing commitment to the credit union. We are pleased to report that Community First Credit Union is fiscally strong and well positioned to continue to serve its members. On behalf of the entire Supervisory Committee, it has been our pleasure to serve the membership in 2022.
Thank you, Mr. Curry. At this time, and on behalf of the nominating committee of the Board of Directors, I will be reviewing the nominations for the board and supervisory committee positions up for election. The candidates for each open board and supervisory committee position were provided electronically to the membership prior to this meeting. A brief personal bio for each candidate was also provided. Each candidate is up for election for a new 3-year term or the fulfillment of the remaining term for positions vacated since the last annual meeting. The nominating committee complied with the notice provisions in the credit union's bylaws. And in accordance with the bylaws, as there were no more nominations than the number of vacant positions for the board of directors or supervisory committee, the board confirms that those who were nominated and qualified are declared duly elected. We will now move to the final agenda item on today's agenda. There being no new business to conduct, that concludes the 64th annual meeting of the membership. I'd like to thank you all for your participation today. I'd also like to thank you for your continued membership and support in the future. Today's meeting is officially adjourned. May I have a motion to adjourn? Second?
Second.
Meeting is adjourned. Thank you.
Thank you, everyone.
Thanks.